Hello, everyone. In this series that I'm going to be starting, we're going to be looking at algorithmic theory with Uncle Shaundy. I'm going to teach you guys everything I know in terms of algorithmic theory, while giving you guys everything you need to know, and also by holding back what is available to my one-on-ones. Okay, so this is going to be a 12-part series, and I would love it if you guys can comment something nice to keep me going. I would definitely love it if you guys can share this around, and definitely love it if you guys can give me engagement for this video series because it is going to teach you everything that you need to know in order to be successful in each of the trading sessions. Okay, so please, I would really appreciate it if you could spread the word. All right. So in this video, what we will be talking about is we will be talking about the 3 a.m. hour. Now, we are looking at this from the perspective of the Eastern Standard Time hour, of course, New York timing. Okay. And we will also take a look, or rather, you will be able to understand the logic of the last 20 minutes of an hour, or we can say ICT's macros. Okay? Okay. Now, we are going to be talking about the 3 a.m. hour and why the last 20 minutes are important in price delivery within the hour, within any hour, actually. All right? Okay. So, the 3 a.m. EST hour. Now, the 3 a.m. hour, it rests in the middle of the overall London session. Okay. So the London high or low will form in two extremes of time delivery. The first is that the London high and low will form between 1 and 3. Okay. Or the London high and low will form between 3 and 4. Common hourly denominator is the number 3, which is 3 a.m. Eastern Standard Time. The technical open of the actual London session. Okay, so anything before 3 a.m. Eastern Standard Time is actually Frankfurt. And nothing to do with London operations at all. Now, the 3 a.m. Eastern Standard Time hour, right? That hour from that point onwards will serve as a reversal or will serve as a continuation because you all know that price can only do one of those two things. Okay, so the reversal will happen like how it normally happens, and the retracement will be price goes into a key level, price does inducement, and then only it will lead to a what we want to call it, right? It will lead to a continuation. That is how it is meant to behave every single time. Okay, that is how price is meant to behave every single time. All right, in terms of the 3 a.m. Eastern Standard Time. Now, the reversal. Now, the reversal will occur when the 3 a.m. Eastern Standard Time candle, I'll just say 3 a.m. hour, okay? When you view it on the 1 hour chart, it liquidates the Frankfurt high or low and hits a key level while doing so, okay? Now, this is followed by a rejection in price, which leads to the formation of an external range demarker. Now, the external range demarker is most popularly known as a doji candle. Scammers call it CRT. The mentor of some and not all scammers call it an external range demarker. External range demarker sounds cool, so I call it the ERD. Okay. Now, if 3 a.m. EST, if the 3 a.m. hour does not perform the function of a reversal, then the 4 a.m. EST hour will. Okay. This is known as delayed delivery. That's pretty obvious, right? It is known as delayed delivery, and that is when you see the reversals. Now, this is very specific to the London session. All right. Now, when it comes to continuations, the continuation will occur at 3 a.m. EST or 4 a.m. Now, this is categorized as a continuation only and only if Frankfurt has hit a key level and is moving in a certain direction, right? So if prior to 3 o'clock, price hits a key level somewhere here and then starts moving higher, that is when you can expect a continuation play to happen. Alternatively, you can get the trade easy bias prediction algorithm, get the bias, and then you'll know whether you are looking at a continuation or a reversal. Okay, so the closure is important as the close determines the willingness of market participants in wanting price in a certain direction. When price closes higher, you want to see it go up because you know that, okay, the bias are strong, let's say. A continuation play for the London session will require price to retrace into an inducement point. Now, if you don't know what an inducement point is, you can visit my older videos. I have a video dedicated just to that, the zero drawdown video. Okay. And then you can make a move from these inducement points. So for instance, in this example, this is structural high, price takes it out. So we have 2 points of inducements, the one that overlaps with the high and the one that took the high. So usually when price takes out that one overlapping with the high, there's some kind of an SMT over here, which prevents it from taking on this one. Okay. Now that's for your own study. All right. Now you can say, Sean, in this example that you just showed, I'm missing the entire move. Look, I'm missing this entire move, and then it comes later, and then only I can take a trade. Okay. So what you can do then is you can utilize the hack. The hack is you're going to be looking at the 3 to 330 range and the 4 to 430 range. Okay. Between 3 and 330, that 30-minute candle, you want to see that 30-minute candle close above or close below the Frankfurt data points. If that is delayed, then you're going to be looking at the 4 to 4:30 a.m. Eastern Standard Time candle, 30-minute candle for a closure above or below the Frankfurt data points. Okay, so you will only be resorting to the 4 a.m. to 4:30 a.m. benchmark for time delivery if and only if 3 to 3:30 does not do the job. Okay, only if it does not do the job, only you are interested in waiting until 4 to 4:30 to see exactly what is going on. Then only you can make an educated decision on what you must do. Okay. Now, in talking about ICT's last 20-minute macro, you saw, based on what I was explaining just now, that the high or low of a session will form at the beginning of the session or at the tail end of the trading session. So that applies to the hourly candle as well. So if the initial end of the hourly candle forms at the beginning of the hour, then it makes sense that the opposing end of the hourly candle will form at the last portion of the candle. So why are we looking at the last 20 minutes? Yeah, that's the biggest question. Why are we looking at the last 20 minutes? Well, ICT said so. I mean, that's his shit, right? So that's why I'm explaining that over here. Okay, so this is the logic behind the macro. Okay, this is the logic behind the macro. Now, if you divide an hour by 3, you will see that it's divisible into 20 minutes of 3 or 3 minutes, 20, 40, 60. Makes sense that the first 20 minutes forms the higher low and the last 20 minutes form the higher low. Okay, that is the logic. Not 4, not nothing, it's 3. Okay. Now, what I'm going to show you guys, I'm going to show you guys a few examples and you guys can take it from there. Okay, in your own study. Now, if you take into account, let's say today's price action, okay, if you take into account today's price action for the London session, let's say, we can see that the London session happened here. Here. Okay. So we know just by looking at this, the Frankfurt data points, right, are going to be between 1 o'clock and 2 o'clock. There. Yeah. Now, using this information, if we want to see a continuation play, then we know that, okay, if this is the 30-minute high over there, and this is that low over here, I want to see price at 3 o'clock close above. Good. After it closed above, this is our inducement. Price comes, and you can look for a buy. Boom. You got a nice scalp over there. Okay, you got a very nice scalp over there. Now let's take another day. Let's say over here. Okay, previous day. So on the previous day, this is 1 o'clock. This is 2 o'clock. Okay, 2:30, 3, 3:30. So we're looking at the entire 2 o'clock hour, my bad. So here. Okay, 3 is over here, doesn't do anything. 3:30 here, right? But the overall bias is bearish. So I'm looking for a close below. So 3:30 doesn't do it. 4:30 does. So when 4:30 closes down, you can look for your sells, right? And you can see it was a very short-lived sell. Extremely short-lived sell for a scalp only. Yeah, right here. A very small scalp, unfortunately. Unfortunately, it was a very small, very, extremely small one, right? Now, if you take into account this day over here, You can see, I can just see by sight that the daily bias is bullish because I coded the algorithm. I know it. Here, here, okay, we can see that. Now, if we are looking to buy, then of course we need to see a body close. So did price close at 3:30? No. So we're waiting for the 4 and 4:30. 4 o'clock? Nothing. 4:30? Yes. Now, if I take you to replay mode here, okay, just to show you that if price closed bullish there, if I go to the lower time frame, okay, so at 4:30 there, so at 5 o'clock basically, okay, at 5 o'clock right here, we close bullish. So using this information, what can I do, right? What can I do? I can use this IFVG, right? Why? Because we already did all the inducements and everything, so I can look for a buy in that IFVG. So I'm going to be buying the moment it trades through. And boom, I have a continuation model right in front of me. Okay, and that is how you can utilize all of this information for the London session. Okay, that is how you can utilize all of this information for the London session. So if this is something that interests you, please do give this video a like. Please do subscribe, comment something nice. And if you need me to answer any questions, I will definitely answer them down in the comment section below. Or you can definitely feel free to send me a message on Telegram and I'll definitely send you a message back. All right. So with that said, I would highly advise that you watch this video over and over and over again until you realize what it is I'm telling you. I'm giving you gold for the London session. Okay. With that said, I'll see you in the next one. Good luck and good trading. Bye bye.